We got some huge news for Visa and Mastercard stock investors as the companies reach the deal with retailers to lower fees. Now I'm going to discuss the details of this deal and what it could mean for Visa and Mastercard stock investors, and update my recommendation on these two stocks, let you know if I think it's buy, hold, or sell following these developments.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Visa and Mastercard struck a deal with retailers that would lower fees for merchants, potentially lowering prices, but threatening the prized consumer rewards. These are those credit cards that come with cashback rewards like a 2%, 3%, or sometimes up to 5% back on certain categories when you make purchases using a certain rewards credit card. I like these. I use these also. And so the merchants that made this deal want to have more control over those fees that they pay depending on which credit cards consumers use. So Visa and MasterCard have been entangled in a lawsuit brought on by retailers for the last 20 years, alleging the companies have fixed the price of interchange fees, which is a large percentage of the fees merchants pay when a customer makes a purchase with a credit card. Every time you use your credit card, the merchant pays a fee. Sometimes it's like a 50-cent fee plus 2 or 2.5% of the transaction value the merchants pay when you use your credit card. I pay these fees on my website. When someone buys my book, I pay a fee. It's like 50 cents for each purchase plus 2 to 3% of the total purchase value I pay as a fee for the users, depending on the credit card or payment method they use. It's higher for some payment methods and lower for others. And so merchants were not happy that they have to pay these fees, especially imagine you're a merchant like Walmart or Home Depot or Lowe's or Amazon. Those fees really add up. And so you're interested in lowering those fees, or you're also interested in increasing competition between Visa and MasterCard. And actually, that's one of the reasons why I've informed investors that I've really liked Visa and MasterCard stock over the previous 7 or 8 years I've been following these companies, is because of that limited competition, right? I devote a whole chapter in my book talking about competition and how I like industries where businesses don't compete fiercely against each other. And this is a prime example. In fact, they're so limited in competition that they're facing lawsuits for not competing aggressively enough. That's the kind of industry I really like, where the businesses are under question because they're not competing enough, right? So I like that. For investors, it's very attractive. I understand how merchants are upset about this, but for investors, it's been very attractive. And it's no secret, or it's no surprise, that Visa and MasterCard are two of the most profitable companies in the world. In fact, Visa boasts the highest operating profit margin of any company I'm following, and I follow around 300 companies, right? So that's why I devote a whole chapter in my book to competition. That's why I'm so attracted to industries that have limited competition, because it results in great profitability for investors. And that leads to shareholder gains, right? Visa has been a great performing stock over, the various amount of time frames you want to consider. I've owned Visa and MasterCard stock in my portfolio for several years now, and I'm happy with the performance that they've returned. And I think it's a lesson, it's a sign to investors. The types of industries you invest in are very important to your shareholder returns. It's the opposite of the electric vehicle industry. If you look at electric vehicle stocks since 2022, when competition intensified, 99% of EV stocks have performed terribly in that time frame. There might be only one stock, which is Tesla, that's performed relatively well. But if you look at the risk-adjusted return, I don't think Tesla stock has performed well either. And one of the reasons for that is because of the intensifying competition in the industry that's brought down industry profit margins and even killed some companies that went out of business as a result of that intensifying competition. So here you have the opposite of that. So the proposal announced this morning would see Visa and Mastercard bring down interchange fees by 0.1% over the next 5 years. So not a big decline. Let's say you're going down from 2.5 to 2.4% in interchange fees. Not a big decline for Visa or Mastercard. But it would also give merchants the choice to add surcharges when customers pay with credit cards, as well as the option to refuse premium cards, which often charge substantially higher fees. Fees have increased when customers swipe their cards by nearly 70% since the onset of the pandemic. So this would be a slight reduction of those huge increases over the previous 5 years or so. Now, looking at the valuations of these two businesses, Visa is trading at a forward PE of 26, Mastercard trading at a forward PE of 30, which I would say is relatively undervalued based on these businesses. They're growing revenue around 10%. Their profit margins are around 60% operating profit margins, great cash flow from operations, again, limited competition, and excellent returns on invested capital because they don't have to reinvest very much into the business. They've already built these networks and the technology behind the networks that facilitates all these transactions. Furthermore, when I look at valuation on my DCF basis, Mastercard looks slightly undervalued at a market price of $548 compared to the intrinsic value of $591. Visa looks more undervalued with an intrinsic value of $484 with a current market price of $334. So I like these two businesses. This deal is relatively neutral for Visa and Mastercard. The upsides and downsides are mixed here. They've been under litigation, so agreeing to a small reduction in interchange fees to reduce this distraction, I think is a positive. Of course, it's going to lead to lower revenue and less profits, but it removes a distraction and it removes some bigger downside risk, litigation and government intervention by agreeing to this deal. Overall, I will be reiterating my buy ratings for Visa and MasterCard, and I'm also really interested in adding to my positions. I own Visa and MasterCard, I already highlighted. I'm interested in adding I'm more interested in adding to my Visa position than the MasterCard position. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.